FTSE 500 is at the same valuation that it was in 1997. What? This is a big one. It's Friday, March 13th. Is it March 13th? It's Friday, March 13th, and this is, of course, the video log that takes 30,000 to a million. The million number is pretty far away at this point, but today I want to talk about a little bit about catching falling knives. If you don't know what that means, it's when the stock market is falling precipitously and you're trying to quote unquote buy the dip at the right time. So you're trying to basically catch a knife as it's falling. I was gonna do a skate where I drop a knife over here and like I catch it with my other hand or something, but I thought it was just pretty silly. So anyway, huge news in the markets today. There's a lot going on, and I'm going to talk about some of these items here because I think it's pretty relevant. And then I'll show you the account and what happened during the last week of just carnage. And I'll just give you a little preview. Losses are huge losses because if you followed some of the other videos, I went in a little too early on this dip and levered up a little too soon, not thinking it's going to go down below 20%. And so I was caught a little bit unprepared, and so I had to scramble to try to find collateral to meet some of the margin, etc. So the losses are a little bit out of the ordinary, okay? But I'll talk about today as well in the rally we had following the President Trump's little speech at the end of the market open hour. So first of all, let's dive right into the Trump speech, right? There's a big rally today, almost 10% or so, 9% plus on the S&P and the Dow and the NASDAQ, which they usually travel lockstep anyways, U.S. stocks. And a small rally in the oil stocks, some rallying going on in the cruise liners and the airlines, which I now own a little bit of. And I don't know if I showed you or not, but I'll show you the entire account and I'll go through everything of what's been going on. So the oil purchases, if you don't know, Trump announced that he's going to be they're going to be purchasing oil to fill up the rest of the reserve considering the low price. So he's like spinning it like it's a good deal to buy on sale, right? So that's good for the oil producers, and especially could bump up the price of oil and save some of the U.S. producers from bankruptcies because the price could keep falling down. But that's obviously a temporary thing. I'm sure it would help actually because it's demand that is absent during these times of like everybody stay at home, don't do any outside activities, right? Not a lot of driving going on, not a lot of flying or cruise liners. And that's a lot of the demand out there, and some of these cruise lines are basically suspending any kind of cruises until April. So a lot going on there. So it might be actually kind of it would rebalance things. So that's from a price standpoint. Anyways, the other thing is I think that unusually, I mean, I'm not a political person at all. I don't like politics at all. Like any politicians, don't even talk to me. But what happened was I think that the confidence of the markets was boosted a little bit. I think they bought the speech to an extent, even though it's a very short time period and it's not representative like of a huge wave of buyers coming into like looking for value. That's gonna play out over the next few weeks, I think. So I don't know how much stock we can take into this like 10% rally at the end of the last hour of trading before the weekend. Obviously, over the weekend, people are going to be consuming this information, and they're going to be what's the word? Regurgitating? No. Well, they're gonna be mulling over it, that's for sure, and they're gonna make a lot of investment decisions next week. Probably most of it on Monday. So Monday morning is gonna be a big open. Usually Friday sets the tone for Monday, and so far this Friday has been very choppy. it started off big in the morning and then fizzled out. It was like up 5+%, and then fizzled out to about zero, and then up 10, almost 10%. So it's very, very chaotic. So well, I don't know if chaotic would be the right word, but indecisive. So far, markets have been functioning fairly properly. So I think that also gives a little bit of confidence in the markets as well. So confidence is the key word. The markets are a play of confidence, and I think that the speech that the Trump gave with all the other private sector CEOs and everything else, and the program that they have in place, I think the market bought it, and I think that definitely reflected itself on the price of the overall market. Now, the other things that were mentioned, that I think contribute to this confidence boost is things like the oil purchases. That's one, and two is the possible line of credit to the airlines and the cruise. I have some notes here, even for you guys. Um, the line of credit that could be potentially opened up to the airlines and the cruise liners if they were to go near bankruptcy. The quote was like something like, paraphrasing actually, that so far no one's called, but if people come calling, I'm sure that the White House will respond, basically saving the industry, trying to save the industry from these tough times. Um, and another big kind of shocker to me anyway, the surprise announcement of the removal of the interest of all the student loans. So the government's going to take a hit in the revenue there. I don't think it's really going to be affected, but that is definitely money going into the quote unquote the new age middle class, which is the indebted student, trying to make their way through life with their new job or whatever, trying to save some money. So that's a little bit, not much, but it should be at least, I don't know how much the interest is, maybe 2, 3, 5% for people on their loans, and their payments are probably about 2, 3, 4, $500 at the most, maybe. Some people I'm sure will have more, but so that's 20, $30 a month. I mean, I guess it makes a difference in aggregate. So it's an interesting move. I think the speech is very political too. I think that he's really trying to appeal to a wide audience. He mentioned New York way more many times, way too many times. I think he's trying to target people, and it turned political for like a little bit. He was down talking Democrats and whatnot, and when he spoke about the way to handle the flu situation, the swine flu situation and whatnot. But anyway, so I think that the effect anyway was real, as far as the market reaction. So that's one thing. Now I also want to talk about silver and gold. They took a huge dip, especially silver today, enormous dip. At the bottom or so, I decided to actually buy calls on silver. I had exited my previous calls. I mentioned I exited them about a couple of weeks ago or a week or two ago. I forget when. So I didn't have any more calls, but now I purchased more calls. I purchased 7 calls. I think they're due June, maybe middle of June, something like that. Now, some possible explanations for the drop is the just the low cash of people. I think people were wanting to buy the U.S. market as it was going up, and so I think that in order to buy those stocks, they will have to sell something, and people don't have much cash laying on the sidelines. That includes me. So I think people are just selling out of metals and dumping it in the stock market, basically just shifting their holdings around. But I do think that, and that's another attempt to catch falling knife, by the way, in silver there. So I think that there's also going to be a possible pop following this downturn because of the supply shortage. So even though demand might be decreased, and right now it's out of favor, a lot of traders are looking to get out of one thing and get into another. I think that actual demand won't be affected too much in the long run, but the supply shock is definitely real, right? So a lot of mining companies are not mining probably. I don't actually know the facts, but I'm guessing that's what's happening. If you know something about it, I haven't actually researched it. It's been kind of crazy lately, so I haven't actually researched much on this, so if you know have any info, please share. But I'm guessing a lot of people, especially in China and stuff like that, they're not producing anything. China is actually a very large gold and silver producer, and if that's not happening, that demand is gonna come roaring, especially as people are still uncertain. They don't want to, and especially with the fact that another thing I didn't mention about the markets here is that the trillion plus market intervention, call it QE4, whatever you want to call it, QE5 or 6 or whatever. So there's this massive market intervention by the Federal Reserve, basically committing more than $1 trillion worth of US dollars that they're going to be buying up treasuries of various durations to quote unquote reflect the composition of the market. And so I'm sure that's going to have some kind of effect as well. And most people are speculating that the rates are going to be dropped back down to zero in the following Fed meeting. So we'll see if that happens as well. So that's a massive, massive liquidity injection. China did one not too long ago. And now here we go. We have the US following suit, as well as other banks around the world cutting interest rates. I think the UK cut interest rates as well. And UK, by the way, having some issues there with the virus as well. And so we have it, there we have it as a situation. Let's see, anything else? Yeah, I mean, I'm going to go to the account now and show you what happened. It's a bloodbath. So this is what I'm sitting at right now, which is a lot better than I was sitting at yesterday or even earlier today. So I'm sitting at 66,543. If you recall, this account was at 86,000 before all this happened. So I'm staying about even with the markets for the year, but I'm losing in the short term by a lot. So this is the week chart, and what I want to point out here is that this was not my low. The low actually was yesterday at 56,000. All right, 56,000 and like 600, maybe 95, something like that. So I had, it was pretty tough. It was a very tough day. And I was actually considering, I was trying to figure out what I can do to try to sustain the account so I don't eventually get margin calls if this continues to drop. And it still might, depending on how things play out Monday. The market still might be selling off. Maybe this wasn't enough, but we'll definitely follow and stay on the edge of our toes. This is definitely an opportunity, though, of a lifetime for people who do happen to sit on a lot of cash. Markets do appreciate over the very long term, about 7 to 12%, something like that, depending on how you count it. And this could be a very, very big boon to a lot of people's retirement accounts if you just stay calm and invest. Stay calm and invest. Is that a meme? Should that be the meme? Stay calm and invest. It could be very beneficial for a lot of people. So if they have the discipline to stay invested, right, and not try risky plays like me, but I'm going to try to maneuver the best way I can to come out of the situation. And I'm positioned very aggressively right now, and I'll show you some of the new holdings that I have and the entire account overall. So here I have, this is the week chart. I'm sitting at $10,000 more worth of value on this account than it was yesterday at the same time. Okay, so it's huge swings going on in there. Why are there huge swings? Because if you notice this number here, the cash number, I actually don't have any, I do actually have possible buying power, but I've limited my margin at 43,000. So what that roughly means is that at 43,000, if my account value goes down to 43, that's about how much money I'd have. So I really try not to get below 43. Otherwise, I'm gonna have to bail myself out. So it's gonna be very rough. I even raised a couple $1,000 of cash today in order to make sure that I have a little bit more room on the downside that I can survive with. Okay, so It's very trying times right now. Look at this account, minus 9.99 on the week. Wow. Okay, so here we go. Huge review of the account. All right. First of all, I had sold a put, $17.5 put on SBRA, which is a real estate a fund that basically deals with elderly people care, which, you know, maybe it's taking a hit because they're thinking some people are going to be dying, and if this gets hit, so they're not going to have as much business. But in any case, this put has been appreciating, and I'm down $677 so far. Today recovered about 50. Okay, so big losses here. Energy Transfer, one of the puts actually expired today, and I was forced to buy Energy Transfer at $9.50, which is fine. Another one coming out here at 320 on March 20th for $10, and I'll be purchasing more Energy Transfer, another 100 shares. I will have about 600 shares of Energy Transfer. So these VIX shorts, oh my gosh, they're just horrible. I'm probably gonna lose my collateral here, so about $600 lost on this play. So it's minus. What am I sitting at here? Yeah, basically I've already lost all my collateral here. There's almost zero chance, I think, but in a week. Well, maybe, I don't know, if the market recovers slowly and steadily, I could get some of this, but for right now, I've lost all my collateral. That's what's priced in. 0% chance of making any money. Can't even sell that right now. So, anyway, moving on. I have another put option of DEM. DEM is a emerging market dividend fund to be buying it at 38. Right now, it's sitting at. Let's take a look at DEM here. Sitting at 34, so I'll be buying another 100 shares at 48. I have $3,426 worth of DEM at the moment, and it's returned negative 10%, or for about $400 so far, up 176 today, or 5.42%. And here's the option plays. I'm down on the option, the two contracts that I have DEM, a $38 purchasing price and a $43 purchasing price. So I'm down 827% so far, or $1,158. Big losses here on the options plays. Eventually I'm going to be paying an overpriced, in an overpriced way. But some things that really make me attracted to this fund is its 8.13 price to earnings ratio and the 6.07 dividend, which I don't think these two numbers even adjusted for some of these losses that have been happening over the last few days or weeks or whatever. So that's going to be a very big dividend fund for me. ATCO is basically C-SPAN. I think they just renamed it, and I'll be buying it at $10. I'm losing on that as well. A little bit of gain today. I have Rio Tinto. This option play basically has me losing almost $600 so far, but it was down over 1,000. Okay, so 43% gain, 39% gain today, $440. I already own some Rio Tinto. If we go here, you'll see that I own 40 shares, which have actually returned because I bought them at a low price. Today was a really big update for Rio Tinto, 13%, and I'm up about 3% on this company so far, which is great. And I do think following this, there's going to be definitely some kind of commodity boom. I think that demand is going to pick right back up as soon as everything is all green and clear. So that's Rio Tinto here. There's the other volatility short play. The SH call, actually bought a SH call, which is down $177 today. I could have sold out of it earlier. I was thinking about it, but anyways, so that's the only really losing trade right now, besides the volatility stuff. Well, actually, and silver and gold especially. Yeah. So I have a call of. So that's the SH EXK. That's insignificant. LUV is Southwest, so I have a call in Southwest. They gained a little bit today, almost $400. Then I have a call on Cameco here that's basically paid off, and I just bought the SOV calls, right? So I'm already losing $88 or 19% of that. But hopefully, they have a long expiration, June 30th. So hopefully things work out, or July rather. Is it June or July? Anyway, um, yeah, I think it's June. July's 7th, August to 8th. Okay, so I know my months, guys. Maybe. So GDXJ, I have a call here for GDXJ minus $170. Disney call, I'm sorry, put sold, gained $453 today, and Apple put Apple. I bought a call. I sold my put on Apple and bought a call on Apple, and now I'm up in order to conserve collateral, and now I am actually up $970 on that call. But overall, I am let's see, up only 528. My Apple standing as it is right now, if you're curious, $21,000. 80 shares actually sold at the bottom today because I needed some more collateral. So I sold like 5 shares of Apple at 255 or so before this big run up, because I was afraid of getting margin calls. So that's where the Apple position is sitting at. It's only up 2% overall here, and over $2,000 returning today after the speech. So that's the Apple position. As far as stock positions, I haven't talked about yet some of the funds here. So excuse me. Some of the funds are getting a bid. IGD, YYY, SDIV. You can see the number of shares I own here, so you can make your own calculation of what I own. But basically, they're all in the green a little bit. They were down in the red big time yesterday. It was probably the ugliest day I've ever seen. I think it was the ugliest day I've ever seen in my life. Worse than 2008, that day. So I bought a little bit of NYMT, which is, it's just mortgage stuff. I don't know why they're dropping. Maybe they're figuring that people will lose their jobs and won't be able to make their payments or whatnot. Or maybe they just have some weird stuff in their portfolios that we don't know about. And they're gonna get hit. But in general, look how steady this was over the year or even 5 years here. Okay, and now boom, big drop. This is a very, very large dividend stock. Used to give me like $40 for every 1,000 or so. But right now, its dividend is sitting at 15.36%. Price to earnings ratio 8.13. I mean, these numbers are just so out of whack, right? So the market's basically pricing in a ton of downside as far as economic activity goes. So if that doesn't materialize, these are going to be very good bets. Okay. So, I believe that, and I'm acting accordingly. So just back down about the catching the knife speech. I mean, yeah, I've tried to catch a knife, and so far I've been cut and I'm bleeding very hard. But if one does not try to catch a falling knife, then it just gets stabbed in the heart. So, moving on. Wheat and precious metals down big. Okay, 10%, and again, it's going down with the price of silver and gold. For various reasons, I think they're just some people have, they're emptying out their precious metal stocks and they're going into the U.S. market following this last, rally here, or either that or just need to meet collateral needs and just need to sell out of something. Moving on, uranium actually took a bid. The uranium stocks took a little bit of a bid today. No big news. I'm still down super big actually on uranium, especially chemical. I mean, this is just a slaughter fest. I'm down almost $5,000 or 30% on chemical. I'm still doing option plays, and you know, if I had money and I didn't think there were better deals, I would buy more Cameco. But as it stands right now, I'm just gonna have to wait for it to recover. I just don't. I'm tapped out. I don't have any more cash. Done. So, hanging on. I'm not even gonna sell calls. I have 1,700 shares of Cameco. I can't. I'm not gonna sell calls here. I wanna. You know, I'm gonna wait for it to recover. The chances of this company going bankrupt, I think, is very low. This is basically the only uranium producer out there right now, in the world besides Kazakhstan. So I doubt the only producer will go bankrupt. I mean, that's crazy. Their market cap right now is, what is it, 2.78. So not even 3 billion market cap. All right. So they're basically the entire industry. So the entire uranium industry is like $3 or $4 billion market cap. I mean, that is so small. Okay. What's another company? I can't even think of a company with a market cap that people know that's this small. I mean, it's pretty crazy. The entire industry is way smaller than any company you can think of. That's in the mainstream. It's a mainstream company. Just to put in comparison, right? That's 3 billion. Apple is more than a trillion, right? So I can't even calculate it. 300 times bigger than the entire uranium industry. I don't know. I can't. Anyways, moving on. So that's Cameco. So here are some of the new bets I've made. All right. So we have, of course, the emerging market dividend fund. ET Energy Transfers have been loading up on that. It caught a huge bid towards the end of the day. Here's the chart of Energy Transfer. It was 644, and then within a matter of minutes, literally minutes, it went up by 50 cents or so to finish at around 690. It was up higher. It was up at 7 at one point after market, or at the close, 698. So I own 400 shares already of this. My average cost is a little bit over $10 per share. So far, losing 32% or $1,300 on this play, and I still have a put option sold, which is down a significant 1,700%, or $305. So I'll be accumulating 2 more shares here. I'll be accumulating the 100 more shares. This says 200 shares collateral because I had sold the call and that obviously expired, worthless. So yeah, Energy Transfer, really big bet. I'm gonna have 500 shares of Energy Transfer, or over $3,000. So that's one bet. Other things, Royal Caribbean. Okay, so I made a bet on this with any kind of money that I could scrounge out. Actually, went in debt to Robinhood in order to buy these plays, and so far I'm losing because again I pulled the trigger too early. Even though Royal Caribbean was up 10% today, and I'm losing 26% on the trade so far. I have 70 shares. My average cost is $45 per share. The price to earnings ratio for Royal Caribbean, 5. 5. Okay, obviously, it's gonna be a bit different, right? It's gonna be a bit different because they're not gonna be having basically any business, and they have to pay a lot of expenses over the next month or two. Dividend yield, 7% per year. Again, that number will change. Headquartered in Miami, Florida. Wow. So I don't know. I think I may actually hold this for the very long run. I don't even want to trade it. I'll probably sell some shares as it recovers, but this is looking like a long-term play, and I do think this will take a long time to recover. But if you look at this 1-year chart, right? Just in January 2017, market setting all-time highs. This stock was at 135. Now at 33. That's enormous, right? That's like 4 times down. So 1/5 the price roughly. It's crazy, absolutely crazy. So 5% earnings rate, 7% dividend yield yearly, 5 price to earnings ratio. What is the price to earnings ratio? Is that's exactly what it says. Is the price of the stock um, divided basically by their earnings, and so 5 times. So what does that really mean? Is that if you just collect earnings, all the earnings from the stock, for 5 years, you would have paid the stock off. Okay, so that's what that means. It's rare that public companies trade at these kind of valuations. Usually that's reserved for private businesses, which trade anywhere from 3 to 5, or sometimes higher price to earnings ratio. If it's a unicorn, it can trade like a million price to earnings ratio, and actually they're negative. So usually unicorns usually lose money. Another play, going down the list, Visa. All right, Visa. I made a big bet on Visa here. And so that's sitting at 174 right now, which is almost around my average cost. But I do have a put, I believe. Or did I get rid of it? No, I don't. Okay, well, I thought I had some kind of additional plan Visa. I don't. I'm confusing it with a different company. So, Visa, I think, is a very company specifically because of its long-term run here. I think it's been doing really, really well. And now it seems like a deal. I don't know too much about the company, but I am seeing how it's handling this, and it's very steady. I don't think that people are going to stop transacting with credit cards anytime soon. I probably should have researched this a little bit further, but I don't have time to research right now. So I'm buying things that I've kind of had my eye on, but I haven't really researched thoroughly. It might come back to bite me in the ass later on. I did a similar play with that, like that with Switch, and it did bite me in the back. But anyways, Visa. Moving down the list, Norwegian Cruise Line. All right, sitting at $11.82. Definitely losing on that 35. I'm down 35%, but not nearly as much as the cruise liners themselves, which are down, like almost 80% on the 3-month chart. Okay, and the year chart. This is what the 5-year chart looks like. So at its worst in 2016, without any kind of crisis happening, this thing was trading at $34.50. Near the highs here, $60, and now it's at 12. So another company trading nearly 1/5 its price from an all-time high. So very crazy stuff. There's no dividend here, but price to earnings ratio. Look at this fantastic number right here. It's 3.5. If there's any kind of recovery in the cruise line industry here, and the Norwegian Cruise Line starts to catch some business, I mean, this is incredible right here. It's probably the deal of a lifetime, right? I mean, you may never see Norwegian Cruise Liner trading at this price to earnings ratio ever again. It could drop further. It's already 80% down. It could go to 90% down. I could lose half my money. It could go bankrupt. I could lose 100% of the money. So I've only committed about $1,000 here. Well, a little bit more, obviously. I committed 1,800, but now it's down. I have 100 shares, and that's that. Norwegian Cruise Liner was very, very stable up until this crisis. Moving on down the list, Rio Tinto, my boys. I finally get a chance to own. I couldn't wait for the put to exercise, so I actually bought some further, and I talked about Rio Tinto a little bit earlier in this video, so I don't need to cover it too much. I'm actually plus on this 3%, which is very amazing considering how early I've been on some of these purchases. Further on, and of course I'm making a bet on the recovery of the commodity market. Disney. I have Disney sitting at 101 right now. Huge gains today, 10+%, 10.5%, or $144. I'm actually positive on this trade. I'm sitting at $20 plus or 1.29. 15 shares of Disney, as well as the put option that I have that's going to be purchasing at 110. So far, this trade, this early entrance trade, has held up the best out of all of them, I think, considering how early I started doing this. And of course, I had to get rid of my Apple's put, so, but I still have this one. All right, moving further down, that was Disney. Disney, by the way, new CEO. Another thing that's happened, actually, before I forget, is Bill Gates out of the board of Berkshire Hathaway and Microsoft, which I think is okay. I mean, I think he's trying to focus more on the humanitarian stuff. He's a really big humanitarian kind of guy, and I think he's focusing on the medical stuff a lot. And so I don't think he was doing anything for the boards anyways. All he can offer is just some wisdom, right, and from his past experience and whatnot. So I don't know that he was actually any beneficial to those boards. And if anything, they could probably save some money not having to pay him, right? Such a high caliber guy. So he's not one of my favorite guys. I have a lot of differences when it comes to just morality, things like that. But I think it's about some of the stuff he's said before, and I don't want to get into it, but it's undeniable that he's done a lot for, the prevention and curing of all types of diseases worldwide, and I think that's probably where he best serves humanity. So I think that's actually a positive for development here. So all right, moving back onto the account, I have SBRA, right? I talked about this fund, Health Care Real Estate Trust. I don't know why real estate's getting hit so hard. It's acting like a financial crisis, but there's been so much liquidity entering into the markets here. I really don't understand why real estate's getting hit. So if someone wants to shed some light on the why, just give me a comment. So that's what I have. Next, commenting on these positions is Southwest, my favorite play so far. Even though I'm down 4% overall in this position, I'm up on the call options. I actually sold one call options to raise cash in order not to make margin calls at a small profit. But so far the call option has been returning, $310, outstripping the negative total return I have for the trade of $91. So a big update for Southwest Airlines. I think it's probably one of the strongest companies that the U.S. has to offer, and I can't see them going bankrupt at all. Zero chance, in my opinion. Of course, I could be wrong. Could be wrong about a lot of stuff, but I think it's very low likelihood that Southwest will go bankrupt. It's trading at 40 right now. I can see the high of it was about 66 over here in December 2017. It pays a nice dividend if I remember correctly. Oh no. Okay, well 1.69, but the price to earnings ratio, again, it's 10, which is very low. For a public company, it's fairly low. Could it get worse? Yeah. Could it get lower? Yeah, of course. They're suffering right now just like anybody else, but it's a bit of a long-term play. And the last play I have here that I'm still suffering from is the the United Kingdom Index Fund. I think it travels closely with the FTSE 500, and that's down quite a bit. Okay, 35% over the 5-year chart, 27% over the 1 year. I can't show you on this chart, but the FTSE 500 is at the same valuation. Let's make this more dramatic. FTSE 500 is at the same valuation that it was in 1997. What? You mean to tell me that there's been 23 years of zero gains in the UK? Like, what the heck is going on here, right? European gains. Crazy Europeans. Crazy. So, but I'm sorry, I'm talking about the UK, but for the FTSE 500, man, 23 years, zero gains. Yeah, there's been some dividends and whatnot, so you can factor those in, but even still, what about inflation adjustment, right? In real terms, the FTSE 500 has been losing. It's been in depression. It's been in depression for 23 years, right? I mean, if anything, the money printing that's just been so rampant recently, it's gonna have to lift at least the nominal value of the FTSE 500. Okay, so that's why I'm buying the UK. I think it's a good market to get into. All right. If I could choose any of my European countries, I would pick the UK when it comes to investing in them. So that's it. That's why I'm buying it. So far, losing. It was up $107 today. FTSE was up as much as 8% today, but finished about 2 or 3% up on the day. Dividend yield, 5.5. What? 5.5 dividend yield. That might, of course, go down, but that's huge dividend. I mean, it's just enormous. So my account is half speculative, half deep dividend value account right now. It's a bit crazy. So moving on, is there anything else on the list here? Let's see. No, finishing with the UK. All right, well, look, I'm up $10,000 today. All right, it's helping my account a little bit. 56 yesterday and March 12th, and now I'm 66. So it's helping out. My other account is not looking very pretty at the moment. I'm losing a bit, but this one offsets it. So there we go. A little bit of repair. Monday should be very, very interesting. Okay. I'm sorry, I should have had my account showing. Anyways, Monday should be very interesting. I'm really curious as to what happens and whether or not I'm going to have to be in survival mode for too much longer. Everyone is following the development of how things are getting, are moving with the virus situation. I think this effort might actually give some confidence to, the healthcare effort that has been in place and some of the regulation removal and whatnot, and state of emergency declaration. It will, I think, give, even though it's declaring state of emergency is supposed to be negative, I think it actually is going to it's going to put some confidence into investors that things are going to get better and they're going to get better quickly. Whether or not that's the case, we don't know. But I could probably handle another 20% down from here before I have to start seriously liquidating things, and because of the aggressive nature of some of these bets. So this is the longest video that I've ever done. I don't know if anyone will have stayed till the end, but I'm really curious if you have stayed. So if you did stay, write in the comments knife catcher. Okay, how about knife catcher be today's phrase? All right, because in my opinion, if you're not catching falling knives, you're gonna get stabbed in the heart. That's what my saying is here. All right, you can quote me on that. Okay, knife catcher is the phrase today. I'll probably make a video on Monday. Peace out. I got a wrong hand. It's kind of awkward.